Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can notice is that we clearly have a range-bound market from a monthly standpoint. We have the top of the range here, and at the same time, we have the bottom of the range here. We can already notice how multiple times the market has respected the top of this range as resistance, and at the same time, we can notice how multiple times the market has respected the bottom of this range as support. So until the market will remain in between these two levels, we can continue to see an alternating of a test of a high of the range and then a test of a low of the range, which is the usual behavior that the market tends to create when it is trapped inside of our range. And we can notice, in fact, how we just had the test of the high, and now the next logical step would be for the market to go and test what kind of liquidity there is at the bottom of the range. Now, if we look closer, we can also notice how the market is currently testing previous weekly support, which is now a turn resistance. In fact, what we can notice is that this level here, which was the previous monthly support, now has been broken to the downside by this candle. And what we know is that previous support, once it is broken to the downside, becomes resistance. The market is currently testing this resistance. So there is a good probability of seeing some bearish price action being created away from this level and for the market to go and test the bottom of this range. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the situation is quite clear. What we can notice is that from a pattern standpoint, we had a very strong impulse to the downside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg, and we can see how all this area here is quite strong resistance, because this is the 0.32 Fibonacci taken on the impulse leg, and it is also this previous weekly support from which both these rejections to the upside were created, which now that the market has broken it to the downside is currently acting as resistance here. So from here, there is a good probability of seeing the market potentially creating a rejection to the downside, going and testing the low of that monthly range that we have previously identified. Dropping down on the daily time frame, what do we have? Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing, precisely if we look at the data on the CAD. Now, what we have to keep in mind is that if we are looking at the data for the CAD, we are actually already looking at CAD USD because all currencies on the spot are traded against the USD. But if we want information on USD CAD, we simply have to reverse everything. So if institutions, as we can see here, are increasing their net positions on the CAD, moving from minus 196k up to minus 68.9k, it means that essentially by moving to the bullish side of the CAD, they're moving to the bearish side of USD CAD, because if they long the CAD, they're essentially making USD CAD weaker and shorting USD CAD. So as institutions are moving to the bearish side of USD CAD, it means that there is a good probability of seeing, in fact, the market create a rejection to the downside, potentially going and testing the low of that monthly range. That is definitely possible, and institutions seems to be expecting that. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. So from a daily standpoint, if the market here will manage to break below the support, that is where things get interesting, because until the market will remain above this level, this was previous support, turned resistance after the market broke it to the downside, again acted as resistance here, creating this red candle. Then the market broke above that zone. That previous resistance was turned against support, and currently the market is still respecting it as support. Until the market will remain above this level, it can easily continue higher. However, where things would get interesting is if we get a break below that zone, because if we do get this break after the break on the retest of the previous support and resistance, that is where we would have good probability of seeing more institutional shorting, which at that point could further increase the probabilities of a potential rejection to the downside away from that level. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I wouldn't be surprised to see a potential rejection to the downside for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.